Okay, let's do this again, but this time we're going to be looking at it more like Industrial Revolution type things in there. So what happens is, again, we have the economic desert island. Workers come in, a worker, a banker, and a manufacturer. So what happens is, this time we do something different. Not much different, but just a little bit. What happens is the bank issues a loan for £100 to the business. Then what they do is that means they have a current account, which is the liability of a bank, the asset of the individual or the company. So same old, nicely balanced balance sheet. Then what happens again, the manufacturer, he has £100 in cash and he has a liability of a loan. Same routine. But this time, what he does slightly differently is, this time the manufacturer, what he does is he pays £83, you get the workers, he pays £83 to the workers to make some stock. Stock spelled correctly-ish, at £83. Let's say 83 items, doesn't really matter what it is. Then what he does, he's got £100 and he pays the workers £17 to go make a fence, which is like a fixed asset of something. It could be I'll start with a fence. So then what happens is the workers get £100 altogether. They don't care what department, whether he works for the like business as usual department or the capital development department. They just get the dosh, and so that's their cash, and their wealth is £100. Same sort of thing as a profit, where it's at the negative. And those two added together give £100 in terms of the assets of the business. They have a loan, £100, and they're nicely balanced to zero as well. Then what happens come Saturday? The manufacturer sells one item, then two items, then three items at £1.20 each. He gets down to the 83rd item, he sells it, he realises he's got £100 in his bank account, his stock is down to zero, and the workers have spent all their money, that's all gone. They've got the goods and they've consumed them. And then the manufacturer, 4:30, runs down to the bank and says, there's the £100 cash, put that into my bank account. Thank you very much. I've gone through on card. I'm not using disposable cash this time. I want you to use that cash to pay off the loan. So at the end of then the balance sheet of the bank is just empty. There's no assets or liabilities at all. And the manufacturer's balance sheet says fence, I'm going to call it fixed assets, £17. And then we have profit, £17. Now, he doesn't have any cash. So in terms of business making money, doesn't seem to be very good at that. He's tried twice to make money and hasn't made a penny. Once, the first time round, he ended up just making too much stock and just closed the whole business down because he was just loaded up with goods that nobody had the money to buy. Had an economic recession. This time, he now has a bright, banking new fence or half-built fence. And that his profit that he owns, the company owned this and he owns the company. And his profit is tied up, his profit minus 17. His profit is, quote unquote, as they say, tied up in the business in the fixed assets of £17. So things are a lot happier because the next week the manufacturer quite likes this. He goes, oh, I'm building up my business. So the next week the manufacturer goes to the bank and said, let's do that again. And next week the manufacturer has fixed assets of £34, another 17. And onwards and onwards and onwards it goes. This guy's starting to build warehouses. He's starting to build ocean-going freight carriers, maybe ocean-going liners. He's starting to build railways to get his goods from one side of the island to the next. He's building more and more and more of these fixed assets. Still hasn't earned a penny cash, but his balance sheet after 10 weeks will look like fixed assets, 340 quid. Profit, 340 quid. He's now a big businessman. Now, the bank manager hasn't charged him a penny so far in interest, and the government hasn't got involved, and but the economy's going round. People, the workers, the consumers, they're getting the goods and services they need. £83 worth of coconut shavings every week, and everybody's happy. So, and that is pretty much how the economy during the Industrial Revolution worked. We had sort of a country full of countryside, and during the Industrial Revolution, factories were built. That's a picture of a factory. Roads were built, railways were built, ships were built. That's meant to be a ship. Fixed assets were built all over the place, which is now, docks were built all over the country. And it was these fixed assets that this increase in fixed assets that funded the profit and allowed business to continue.